What a way to start the new quarter and a new month. U.S. stocks just took a turn, and joining me is Jonathan Corpina to, of course, talk the markets. Now, Jonathan, I know we're starting the playoffs soon, but talk about a complete strikeout with manufacturing. Would you say that this confirms we are in a contractionary area now?
I think it just definitely raises awareness that, our economy might be softening at this point. There have been some other signs that are out there. But this is just another one of those, ingredients in the recipe that's showing us that we should be very concerned and continue to be concerned, about our economy and what the next few months look like.
And today, President Trump blaming this on a stronger dollar on Jay Powell for hurting our manufacturing. Are you concerned about a stronger dollar and the effects it has on stocks and our economy?
I'm concerned about a lot of things, and that's clearly one of them. But there's so many different things that are out there that's hanging over this market, and we've been resilient to it, right? And we've also become, very immune to these negative headlines that are out there. But it just seems to me that there's some, a big gray cloud that's hanging over here, and we could talk about interest rates, we could talk about China, we could talk about Iran, we could talk about Saudi, we could talk about U.S. economic data. Like, there's so many different things that are just funneling themselves up to this point where the apprehension is, we're starting to feel that in the market. I'm surprised the VIX hasn't moved more than it has. It's kind of been trading in this range. I think once we get above the 20 level on that, I think there'll be a little bit more concern there. Was hoping that it was going to get down towards that 12 level, got as low as the 14s, but, really couldn't get back, break below there.
Yeah, great point about the VIX. Now, we are entering another phase of lower interest rates. Do you see interest rates continually being lower?
I think the Fed has made the moves that they've orchestrated to this point, and I think they've left themselves a little bit of an out now to kind of pause at this point. If the president keeps, pushing, who knows what that influence or what they're gonna do with that. But as we're heading into the fourth quarter here, so much uncertainty that's really going on. We continue to talk about China. We've got a meeting date coming up in the next 10 days. So hopefully, A, that occurs, and B, we get some information out of there, and the Fed can use some of that to get a better understanding of what economic outcomes are going to look moving forward. The only thing I feel that we have right now going for us is that we're heading into earnings season. Earnings season has helped our markets and our economy overall. I think sentiment is somewhat mixed, and hopefully earnings season can bring that back.
So are there any sectors that you think will be a home run as investors maybe are looking for maybe something riskier and some more yield?
Yeah, so, I know we talk about this often, and I always point back to the financial sector. I think, that's one that's been clearly, in the forefront of many different things that's going on as far as interest rates are concerned and how that affects the financials that are companies that are in there. And, more interesting, I think it's really just going to be tech. Everyone's waiting to see how tech is going to be impacted by tariffs. And it's not just the Apples, it's the suppliers of Apples and the companies that trickle down from there. So that too is going to be one to clearly keep an eye on, because once we get some or any information as far as what's going to happen between U.S. and China, I think that's the sector that might have a quick shift to it.